Hello, my name is Mike Hetman, and welcome to another edition of CMS Forex News. Today is Wednesday, November 7th, 2007. It was another bruising session for the dollar, as it suffered some strong swings against the majors overnight. We showed you yesterday that the euro had gained a new record high versus the dollar, and had broken through 1.455. Today, the euro climbed another 150 pips to reach a new high at 1.4725. The dollar fell as Chinese officials made it clear that they are going to start moving their reserves out of weaker currencies, such as the dollar, into stronger ones like the euro. The pound also had a very strong day against the dollar, as it broke through resistance at 2.09. After dipping in the dollar's favor on Monday, the pair has climbed about 250 pips, from 2.08 to settle near 2.1050 in New York trading. The dollar-yen dropped through the bottom of its recent trading range, with the yen gaining around 190 pips overnight. After falling through the 113 level to settle low near 112.80, the pair recovered slightly in New York trading. The yen also advanced against the pound and other high yielders in a reversal of the price action in the previous session. The pair appears to have fallen into a 240 pip trading channel after last week's volatility. Now that we have looked at today's most important market moves, let's take a look at some fundamental data. In Australia yesterday, the central bank raised interest rates citing recent inflation. Increased domestic demand, along with higher prices for the country's commodities, are adding inflationary pressure to prices. The Bureau of Statistics in Australia showed that its quarterly house price index increased 3.5% in the third quarter and 10.6% on an annual basis. In a second release, the Bureau revealed that home loans in September decreased more than expected. The yearly figure now stands at a negative 0.9%. In the UK, consumer confidence held stronger than forecasts, as the NCCI measure slipped by 1 point to 98. In a separate release, prices in UK shops increased 1.1% on an annual basis, which is the strongest reading for this indicator this year. Price increases were primarily driven by more expensive food items. After the disappointing data from German factory orders yesterday, today's industrial production report surprised on the upside. The 0.3% monthly gain was led by the energy and construction sectors. In the U.S., preliminary numbers for labor productivity were very upbeat, showing a 4.9% increase in the third quarter. With increased productivity, labor costs fell 0.2%. Easing inflationary pressures in this aspect of the U.S. economy. And finally, wholesale inventories increased more than expected, climbing 0.8% in September. Sales increased 1.3%, and so the stockpile of inventories does not seem to be coming from a lack of sales. In upcoming releases tonight, we get employment reports out of New Zealand and Australia, along with machinery orders from Japan. Tomorrow morning, all eyes will focus on comments from the European and British central banks as they decide on rates, though they are expected to hold. Also, Canada will release housing data, and the U.S. will show its weekly jobless claims. And that's it for this Wednesday's recap of the Forex market. I'm Mike Hetman. Join us tomorrow at cmsfx.com.